Good day, ladies and gentlemen, and a very warm welcome to the Alkem Laboratories Q1 FY22 earnings conference call, hosted by Motilal Oswal Financial Services Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tushar Manudhane from Motilal Oswal. Thank you, and over to you, Tushar.
Thanks, Ali. Welcome to Q1 FY22 earnings call of Alkem Laboratories. From the management side, we have Mr. Sandeep Singh, Managing Director, Mr. Rajesh Dubey, Chief Financial Officer, Mr. Amit Gare, President, International Business, Mr. Yogesh Kaushal, President, Chronic Division, and Mr. Gagan Borana from the Investor Relations. Over to you, Gagan, for the opening remarks.
Thank you, Tushar. Good evening, everyone, and thank you for joining us today for our Q1 FY22 earnings call. Earlier during the day, we have released our financial results and investor presentation, and the same are also posted on our website. Hope you had a chance to look at it. To discuss the business performance and outlook going forward, we have on this call the senior management team of Alkem. Before I proceed with this call, I would like to remind everyone that this call is being recorded and the call transcript will be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements, and the same must be viewed in conjunction with the risks that our business faces. After the end of this call, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Mr. Sandeep Singh to present the key highlights of the quarter gone by and strategy going forward. Over to you, sir.
Thank you, Gagan. Good evening, everyone. So without further delay, I'll get into it. We have had a strong start to the financial year, with total operating revenues growing by 37.1% year on year, EBITDA margin coming in at 21.7%, and net profits after tax growing by about 11% to 468 crores. During the quarter, we also generated healthy cash flows, which has helped us further strengthen our balance sheet, and now we have a net cash position of 980 crores as on June 20, 2021. Talking about our India business, it registered a growth of 65.3% year on year during the quarter, which was majorly driven by strong volume-led growth in acute therapy. Even adjusting for the low base of last year, the company delivered a robust growth over Q1 FY20 base, which was more of a normal quarter for the company. Moving to international business, the US business reported a sequential growth of 11.2% year on year, a decline of 9.3% in the quarter. During the quarter, we filed 2 ANDAs with the US FDA and received 5 approvals. Apart from the US, the international markets delivered a strong year-on-year growth of 56.4%. Tracking our progress in the biosimilar segment, I'm happy to share with you that last month we have received market authorization for 2 more products for India market. We would soon be launching these 2 products, taking the total of 3 product launches in India from Enzene platform. We have also signed a few important licensing and supply agreements in the biotech space worth 100 crores. They are based on milestones going forward with global pharmaceutical companies to monetize the product pipeline globally. In terms of regulatory status of our manufacturing facilities, St. Louis facility was inspected in June 2021, and post the inspection we received 2 observations. We have already replied to the US FDA with the corrective and preventive action plan to resolve these observations. Apart from St. Louis, all other 5 manufacturing facilities supplying to the US markets have an EIR as on date. Our new manufacturing facility at Indore is awaiting pre-approval inspection by US FDA. Also, very recently, we had a remote and virtual US FDA inspection of a bioequivalence center at Taloja, which we successfully closed without any observation. With this, I would like to open the floor for Q&A. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on good numbers. Just on the sales growth outlook, especially for India business, given that it's a very high growth, how do you see the rest of the year panning out for you?
Yogesh, you can go ahead.
See, the first 2 months certainly were supported by COVID and all that stuff, so was a very healthy growth. But now, so with now industry settling to around 11 to 12%, we expect that balance 9 months and by end of the year we should be in a high teens. That's what is our projection by March.
Okay, you mentioned COVID-led. So, I mean, apart from vitamins, which is indirect COVID use, did you have any other COVID products?
No. We don't have any antiviral or anything to do with the COVID except for multivitamins, A to Z. Yeah.
So it's all core portfolio, right?
It's all core portfolio.
Yeah. Okay. And 2 quick ones for Mr. Rajesh Dubey on the, one is on the gross margins. It seemed a little low despite a strong growth. Are there any one-offs, if you can explain that? And secondly, on the free cash flow and net cash flow for the quarter. Thank you.
So, Prakash, I will take your first question, that is gross margin. Yes, gross margin in this quarter, it is having one-off. And that one-off is, we have extended our provision related to near expiry. If you recollect, in Q4 of last year, we revised our policy for taking provision for near expiry from 6 months to 12 months. And that was one quarter where we took sizable near expiry provision. When we are taking provision, we conclude or we estimate we will not be able to sell this product at normal price. And but possibilities are there. It may get realized also. But right now we expect we are not going to sell. So some of the inventories fall due as per our policy within 12 months shelf life period, and that also is considered. So I think definitely we see this as a one-off, because going forward then again it will come in our normal cycle of 12 months. So this time actually NRV provision and the near expiry, if we put both this together, so definitely it is impacting our margin by 1.5%. And
okay.
Yeah, I think that is a major reason behind it.
And free cash flow and cash flow from operations?
So we have free cash flow of 981 crore as of 30th of June. In this quarter, we generated more than 450 crores free cash. Yes, and by year end, if you want some guidelines, we'll be crossing 1,000.
So 450 crores is after all the capex and working capital, 450 crores.
Yeah.
Okay, perfect, sir. Thank you. I will join that.
Thank you. The next question is from the line of Nithya Balasubramaniam from Bernstein Research. Please go ahead.
Yeah, thank you. So in India, I presume other than the VMS portfolio, your anti-infectives portfolio, as in doxycycline, etc., would also have seen a benefit because of wave 2. Is it possible to strip out the growth from those kind of products and tell us what's the true underlying growth of your base portfolio ex-COVID?
Other than COVID, in fact, didn't really impacted our core portfolio. So other than multivitamins and all, yes, there was in fact impact on anti-infectives, but the anti-infective also grew because this time the lockdown was not for patient and doctors. The patient flow was almost normal. So that's the reason, because of base effect also we got a high growth, and because of patient flow also there was a good growth. So of course in the coming quarter we should be coming back to, as I said, in a normal growth trajectory, which we projected around high teens and all.
Got it.
Yeah.
In terms of your critical care portfolio, how is the recovery looking like in that part of the portfolio?
As far as, if you're asking me, portfolio which is for critical disease management, then we are mainly into hospitals, okay, and which are injectables. So our critical care portfolio is largely major antibiotics like meropenem and all. Other than that, we don't have any cardiovascular portfolio which is used in critical care management. So as hospitals are opening up, COVID, there were very high uses of high-end antibacterials. So there was some traction we have seen in injectables. But in the coming time, as elective surgeries opens up, we a similar trend.
Understood. Thank you. And one on US, I think a couple of calls earlier you had guided for about 15 to 16% growth for the next 2-3 years, driven largely by new launches. But we are seeing the growth kind of cooling off a little bit, though QOQ still looks healthy. Anything, do you still stick to that guidance? Any color on why the YOY growth wasn't as you would have expected?
Yeah, Mr. Ghare, can you please take that?
Sure. Thank you. Yeah, I agree with you. The broad guidance still remains, broadly what we had given. And, year on year, quarter growth, of course, there has been a degrowth. A couple of reasons obviously affected. One was obviously we had a lot of a strong quarter last year, mainly because of some of forward buying done by our customers. A bit of, stockpiling and panic buying as well affected that. The reason, so that's one of the reasons. The other reason has been some loss of market share and obviously price deflation, which has, sort of depressed this particular quarter compared to, 12 months ago. But our broad guidance remains similar, and we are, looking to grow at those numbers.
Got it. Thank you so much.
Thank you. The next question is from the line of Abdul Kadir Puranwala from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on a good set of numbers. So would it be possible for you to provide some color on how the growth in India would be in acute and chronic and the trade generic segment?
I think broadly we kind of not give therapy breakup, but I can tell you that acute grew, outperformed the growth overall in spite of a high base, and chronic and trade generic both grew like very substantial, about 50% both of them.
Understood, sir.
Yeah.
And thank you. And my second question is on the US business. So recently we got a approval for Duexis. So any color on that? I understand the product size is not very huge, but since we want exclusivity and we are maintaining our guidance, would Duexis and a similar FTF opportunity play an important role in maintaining our guidance for the US business?
I think I will let Mr. Ghare come on that. So, Mr. Ghare, over to you.
Thank you, sir. Yes, we have launched the generic Duexis, famotidine ibuprofen, and obviously we will look at acquiring as much market share as we can. Please remember this launch is at risk. We are still litigating in the upper circuit. But beyond that, I would not like to comment anything further at this time.
Sure. Thank you.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for the opportunity. My question is again related to the US market. Can you tell us, we are likely to launch this product which is dabigatran, at the end of this calendar. So if you can let us know as to, whether we will be having 180-day exclusivity on that and will it be a meaningful product for us?
Mr. Ghare, please.
Yes, we will launch, this product. I'm not sure whether the launch is December or has been pushed back by 6 months because of pediatric exclusivity, so I don't want to comment. But certainly we'll be the first to launch the product in the market. We will have a 180-day exclusivity. The first launch and the 180-day exclusivity will be shared amongst all the first filers. And in terms of whether the product will be significant for us or not, I would not like to give any specific guidance on any particular product. In any case, launch is few months away. But we will obviously try our best to get commensurate market share.
Understood. And, given that we have had 2 high-value launches, that is generic mesalamine and the UXs, as you just mentioned, which I would assume that will be very high margin given the low competition. Would you not think that, the lowered gross margin guidance that we had given last quarter needs to be revised upwards? Any thoughts on that? That will be helpful.
Yeah, so
generally sorry, go ahead.
The question is for you, rightly. Both products are for US. So go ahead, sir.
Okay. Sorry for that, Sandeep. Thank you. Look, the overall guidance given by CFO, obviously he will explain, but generally, the new products always come with a better margin profile. And when we look at our overall product mix, we obviously factor that. So certainly the new products will come at a higher margin. I guess that's all that I can answer on this question.
Yes, sir. If CFO can tell me about the lowered gross margin, will that still be maintained or do you think it will improve? That will help me.
Yeah, I think our guidelines is not on lower side. Our guidelines, it was 60 to 61%. Of course, we are not factoring product to product. It's a basket gross margin guideline. There are so many factors which affects margin, and particularly gross margin. But we strongly believe what gross margin we have given, we are going to work towards that. In this situation, even this gross margin, we might feel little bit pressure kind of situation because of API prices increasing. But all blend put together, we feel will be there what guidelines we have given of 60 to 61%. Is this okay?
Yeah, this helps me. And obviously, if you can also comment on EBITDA margin, that will be even more helpful.
EBITDA margin, our guidelines, it was from 19 to 20% for this year because our endeavor was to improve by 100 basis points after a year. So we remain with our guidelines. Looking to better quarter one, we believe 50 to 100 basis points will try to improve on that.
How much, sorry? How much will you try to improve?
50 to 100 basis points will try to improve.
50 to 100 basis. Okay, understood.
Just to clarify, last year's guidance was 19 and last call we guided for 19.5 to 20%. So this 50 basis point improvement is over that guidance and not the,
Oh, okay. Understood. Yeah, that works.
Thank you.
Okay, thank you.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Yeah, thank you for taking my question. First on the trade generic business, how has this business, momentum been, over the last few quarters? We did see some pickup during the pandemic. Has the growth rate for that business slowed? And the related question, we are seeing more players enter the trade generic segment. Does that make it difficult for us to continue to grow this business at double digits that we've been seeing over the last few years?
Yeah, I'll take that question. So, to answer you, trade generics continues to grow at very healthy pace. and the growth is not slowing down. And this question specifically of large players entering trade generics, I think it was expected because this is kind of growing very, very handsomely for the last few quarters. But you said, will this double-digit growth continue? The answer is emphatically yes, because keep in mind we don't only grow in double digits, we grow in very high double digits. So achieving double digits and maintaining that over the next few years, we don't see it as a challenge at all.
And what would drive this growth, Sandeep, despite the competition in your view?
Sorry?
What would drive this double-digit growth, the strong double-digit growth that we're guiding to, despite the competition that you will see?
Sure. So I think a lot of people underestimate trade generics business, and that's also a franchisee and a brand business actually. It might seem like an oxymoron, but it's not. So the relationship which we enjoy with the trade channels is something which can't be replicated overnight. It takes many, many years. We have reached where we have reached in 20 years. Didn't happen overnight. So all the best people have come in, but they will also take the time, ma'am. And we got to kind of appreciate that. This is a tough business, actually.
Understood. And in your opening remarks, Sandeep, you mentioned, licensing, certain licensing deals worth 100 crores,
right.
With Global Pharma. If you could give some color on that, I didn't really, catch the context of that, please.
I'll tell you that, yes. So, Inzina Biotech subsidiary has out-licensed this. One of them is a MAB. It's with a European company. And that out-licensing value is $10 million based on milestone and up to launch. And they have also out-licensed one recombinant peptide to a company in South Korea. That's around worth $2.5 million. So therefore, both of them put together, I said that it's close to 100 crores. And that's again based on milestones. But I think they are bigger out licensing, and I personally see a bright future for biosimilars as we go forward.
Understood. Okay, got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Hi, thanks for the opportunity. On biosimilars, will you be able to share what percentage of our R&D spends today is for biosimilars? And on the license of the MAP product that you have done to a European partner, what stage of development is that product? And could you give some timelines around development and launch for this product?
Sorry. So I got your first question, and second question maybe I'll ask you to repeat, but I'll quickly answer you. So we spend close to 12 to 14% of our R&D on biotech historically. What is your second question, sir?
So this product that you licensed to Theramex,
yes.
What stage of development is that product? Is it in clinical trials already, or?
Yeah. So in India we have got approval. So in India it's going to be launched, but yeah, this is for Europe and some other countries. So that we are going to enter clinical stage very soon for Europe. Phase 1 will initiate in a couple of months. So early stage.
And the market formation or patent expiries for this product would be.
No, I mean if you're talking about launch,
what timelines?
That's still like 4 years away, 4 to 5 years away.
Okay.
Yeah.
Okay. And my second question is on the PCPM for domestic business. How much lower is the PCPM for the chronic segment in our domestic business, and when do we expect this to catch up with the acute segment PCPM for us?
Yeah, Yogesh, you can take that.
So, we have some very evolved business and then we are evolving business. So for the evolved business, we have a productivity in a range of around 8 to 10 lakhs. And from the evolving business, our productivity range is around 3.5 to 4. And the new businesses, our productivity ranges between 1.5 to 2 lakhs. Have I answered you?
Okay.
Yeah.
Yes, got it. And then the evolved business, when you talk about, you're probably referring to our neuropsychiatric.
No, anti-infective side. Yeah, anti-infective.
Okay. And then within chronic segment, the chronic therapies, would the PCPM be significantly lower versus the company level PCPM?
Yeah, since we are, almost 80-85% antibiotics, anti-infectives, so there our PCPM is in a range of around 8 to 10, and chronic is evolving, where we are in a range of around 3.5 to 4 lakhs.
Okay, understood. Thank you. That's all from my side.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good evening, and thanks for taking my question. So my first question is on the vitamins portfolio. So this business is growing at a very fast clip, and Alkem is actually growing double, almost 2x the market. Now we're number 2 in India. So I'm just wondering, what's the sustainability of this business from here on?
So see, COVID certainly has an extraordinary surge on such, multivitamins, and particularly those which are zinc-based preparations. So, this 3-month traction, certainly you can't see, in a regular time, but they are our core product. They are our focus products. So they will sustain, they will outbeat the, industry growth, that is for sure, but certainly not the COVID surge. So these are our core focus products, and we should outperform the market growth.
Right. I mean, so would it be fair to assume that maybe, quarter or two down the line, there could be some pressure on this portfolio because of a high base?
No, yeah, you can expect. In the first quarter next year, you can expect some pressure on these portfolios.
Sure. And the second question is on, a pre-so that you launched in this quarter. So would it be fair to assume that you're working on other mesalamine products also, and are there any sort of launch timelines that you would like to share with us?
Yeah, so honestly, we don't like to talk about our pipeline. So any assumptions, I think, would not be correct. And also would like to add that these mesalamine formulations, we all know, are pretty tough. So even if we are working on it, I don't think so we'll be in any position to tell you when or where, if at all it happens. So nothing right there we want to comment.
Sure. And just one more question, if I can. Can you share how the API prices are behaving now, whether it's going up or it's stabilized now, and how is it impacting your gross margins?
Mr. Dubey, please.
Yeah. API prices, it has started going up from March end, and till mid of May, actually, we witnessed major spurt in selected API prices. But after that, it started softening, and it has not come back to normalcy. But I think major it has come within range, and slowly we expect it is going to be normalized. So now trend is not upward, either it is softening or stable kind of.
So is it yet to impact our numbers, or has it already impacted in this quarter?
In this quarter, some little bit impact it has come, but since, as I said, prices started showing upward trend from April and May, so we procure material, then formulation has happened, and now once sale is going to happen, then it will hit to our financials. So June sale, to certain extent, and very normal or very minimal kind of impact it has gone. But in quarter 2, we'll be having rest of the impact of API price increase. But I think, yes, it has impacted, but it is manageable, and we are comfortable on gross margin, what guidelines we have provided.
Okay, got it. Thank you, and all the best.
Thank you. The next question is from the line of Sriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Also, just one question from my side. I mean, this staff cost looks very high this quarter. So, I mean, was there any one-off in this quarter, and or any specific increase which has happened?
Staff cost, Mr. Dubey, please. Yeah. So staff cost, we have a few one-offs in this quarter. One is, in fact, is on account of gratuity and leave encashment liability provisioning. And this has happened because we revised basic of our employees. Traditionally, it was 37% of the CTC, but new wage bill is expected, so we decided to true up to certain extent. So from 37%, we increased to 42. So that one-off it has come in this quarter, and that is not going to remain going forward. Second, staff cost it looks on higher side because we had very good quarter on our revenue. So we paid incentive. If you are comparing with last year's quarter one, definitely incentive, percentage-wise and achievement-wise also it was very much compromised. This quarter, since we had surplus, so incentive percentage it has increased as well as quantum also it has increased. So putting these two together, it gives major answer to your question of increased employee cost.
Okay. So going forward, how should we look at this figure? Like because earlier we were around 400 crores kind of figure. So will it be like 450 or 500? Generally, what should be the range?
Definitely, it will be optimized by say another 40-45 crores. What we have now. So if I take out, suppose 50 crore out of this, then it will be somewhere in the range of 480, 75, 80.
Okay, got it. And other expenses would be normal, right, now, in this quarter also, like this is a normal run rate.
Other expenses, it looks normal, but let me just tell you, still our marketing expenses, it is normalized to the tune of 80-85% only. So we should expect 10 to 15% in our marketing expense, I mean to say. Other expense includes everything. So out of that, marketing expense, as far as still 85% normalization has happened, we can expect another 5 to 10% going forward.
Okay, sure, got it. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura Capital. Please go ahead. Sayan Mukherjee from Nomura Capital, your line is unmuted. Please go ahead.
Sorry. Can you hear me? Yeah.
Yes,
we can.
Yeah. Just this you mentioned about employee cost. There is some adjustment on inventory. Is it possible to quantify how much are these two elements in what?
Yeah. Employee cost, Sir, I'm sure you must have, I was able to explain why we are having one-time cost of that. We increased basic from 37% to 42%, resulting into increase in gratuity liability and leave encashment liability. So it is not cash payout, it is provision. And if I put both this together, around 29 crores additional provision we had to pay.
Okay. And on the inventory provision that you took this quarter, sir, on
inventory provision and additional NRV provision, because NRV, it goes along with your sales. So if I put both this together, around 35 to 40 crores, in fact 38 crores, it was additional, which we can term as one-off kind of.
Okay, thanks. And Sandeep, on the biosimilars, front, there seems to be some progress made. So what is the kind of investments we have made so far? You mentioned almost 12 to 15% of R&D goes in there. So what kind of annual expenses we incur? And if you can talk about the capabilities that you put in place, the people that you have got, the team that you put in place, and just to give us a sense, like what makes you feel good about the business in terms of you being able to execute your strategy here.
Sure. No, thank you, sir. So totally we have invested 650 crores in biotech. This includes R&D and capex and total expenditure so far. Roughly we spent close to 100 CR on biotech, including now manufacturing and everything. That's the total expenditure on biotech. Your question on what is the capability to kind of for the front end. So
mainly biotech are for, let's say, some indications of onco, and some of them also in bone health, in osteo segment. So I think on the onco segment, yes, we have some some catch up to do there. But on the bone health side, I think we are very strong. We have good connect with orthopedics, and so we'll do well there. But keep in mind that this is a business which is meant to be not just for Alkem. So we have out-licensed some drugs to Lupin, we have out-licensed to Zydus, and even globally we are out-licensing. So we should not rely only on our strength to do justice with biotech. So just keep that in mind, Sayan. They will tie up with the best, irrespective of whether it's Alkem or not. We'll get the best partners and we will be executing this. In India, Alkem is a strong partner, so Alkem is the right choice. But globally, we'll go with people who can do justice with it.
Actually, Sunil, I was also looking at the product development capabilities, R&D. If you can give some color on that.
So, and honestly, Sayan, I don't know how much color I can give on that, because honestly, only with time it will tell how good or bad it is. But what I can tell you why I think I'm confident about it is, people have done extensive due diligence. Only after that you can out-license things. So we have gone through those rounds. I hear good things about them from our partners, and they are putting the money where the mouth is. So we have our out-licensing deal already in a very early stage of a company. Second thing, the employees who work on this in this business in Zine Biotech, a lot of the senior management has come from US. They have worked in companies like Amgen and BMS and all. So I think we've got great people there. But yes, few things only time will tell, Sayan. As an entrepreneur, I'm always positive, but that's my job. But I think you all be cautious and just watch us. And that will answer us honestly.
Okay, and do you plan to kind of, list this separately or do some funding here?
Yes, I think we are discussing, Sayan. That's an interesting, very interesting topic idea. We do mull over it, but we also kind of are in a situation where we think if we kind of raise or list so early, we might lose a lot on valuation because we are at very early stage. But I do think that biosimilar or biotech is a huge opportunity. It might need a lot of capital as we get ambitious in the next few years. So those options are certainly on the table, Sayan. I must say that.
Okay. And just one clarification, Sandeep. This 100 crore you said, over what period you have invested in?
So this is based on milestones, and some of it would be on back-ended. What I mean is on completion of phase 1, phase 3, and on launch. So some of them are back. A large part of it is back-ended, but they would. So it's up to launch, Sayan. So you could assume in the next 4 years.
Okay, no, Sandeep. Actually, I was mentioning, you mentioned 650 crore of capex, and then you mentioned something about 100 crore additional.
Capex, both, Sayan, 650 crores.
Okay.
That's the total investments we have made there. Yeah, not just capex. Yeah.
Oh, okay.
Yeah.
Okay. Thank you. Thanks.
Sayan. Thank you, sir.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Market Limited. Please go ahead.
Hi, thank you for the opportunity. So my question is coming back to operating costs, a few clarifications. So on the API prices increase, you said after May it's now cooling down, and you haven't seen anything incremental in recent months, right? Can you clarify, any observation on the API price in recent weeks?
Yeah, Damayanti, you're right. I said same thing. Actually, API prices mainly in the month of April, and so it has started softening after mid of May, and it has not come back to the normalcy to an extent closer to earlier one. So we feel now.
Okay. Okay. And then coming to marketing cost in India, you said we are now at 85%, and then as business picks up, we will see further change there. That's on marketing cost, right?
True. Actually, in fact, I just wanted to indicate our marketing activities, it has not come to normalcy when I see cost of my marketing cost. So we strongly believe still cost front, we can have additional cost to the tune of 5 to 7% or 10% going forward once it becomes normal. And I think Mr. Yogesh Kaushal is also here, and he will be in better position to give exact feel on marketing activities, how much it got normalized.
I go by what our CFO said. Initial first quarter, because of May lockdown, there were certain restrictions on marketing, but in the second and third quarter, we see the marketing cost opening up. So we should come back to our usual marketing investment in the second quarter onwards.
Okay, sir, that's helpful. And just a final comment on your observation on recent cost on the freight and logistics side, because some of your competitors have mentioned certain increase in there. So what are your observation on this freight and logistic part?
Yes, actually we witness higher selling and distribution cost, which is mainly logistic cost. And if I have to bifurcate between domestic and international, domestic obviously it has to be on higher side because of our enhanced sale. So that is justified. Even for our international logistic, actually rates it has increased. So that also resulted in higher selling and distribution cost in this quarter. And thus increase in rate is significantly high. So it was a substantial amount which has gone in our P&L of this quarter.
Okay, so that was for 1Q. What are recent observation, like what are update on this logistic cost? Has it cooled down a bit, or it's at similar level compared to last?
But not substantial. Still normalization has to happen there. If I'm overseas logistic cost. For domestic, I think it will go in proportion to your revenue. So when I see on absolute amount term, it indicates higher debit it has gone, but it's in ratio of our revenue. So domestic, I don't think any abnormality it has happened, but for international rate, it has gone up. It has come down a little bit, but not very significant. So still we are waiting for normalization.
That's helpful. And so my final question is on your general observation on the pricing erosion environment in the US. So can you please comment on that?
Mr. Ghare, please.
The pricing deflation has, it's always there, and it has been strong, in the past 15 months since the beginning of COVID. Obviously, the products which are launched, the newer products, undergo a higher deflation. I think overall on our portfolio basis, our deflation was still in single digits, but on higher side, higher single digit numbers.
Okay, so we are still in single digit, and are we seeing any, I'll say, intensifying pressure in last few months, or it's broadly in that single digit range for us?
Well, let me just say that the pressure has been there since the last 12 months, and not that it wasn't there before, but that increase that I talked about from the 3-4% levels to 8-9% levels has been there for last 12 months. So it hasn't increased, but unfortunately it hasn't decreased as well.
Okay, sir. So thank you for your answers. That's helpful.
Thank you. The next question is from the line of Yash T from iThought PMS. Please go ahead.
Yeah. Hi team. Congratulations on a good set of numbers. Am I audible?
Yes, very well.
Yeah. So I have two questions. The first one is, so on a medium-term basis, let's say like 5 or 6 years down the line, can we double down on our current revenues, which is around 8,800 crores right now? So can we go around 17.5 to 18,000 crores organically? So I don't want any very specific numbers, but as a long-term shareholder, if you could just give some broad guidance if that growth is achievable. And if yes, like what would be the drivers for these growth?
Yeah, if you're talking about doubling in 6 years, I think my math is not very good, but that's maybe 12 to 13%. So in that the case, we would. We normally don't like to give forward numbers. So
Yes, sir. Like some broad guidance. And what would be the drivers for that growth? If you could just.
Yeah, the drivers for this group, those Alkem would be obviously domestic business, which is a large part of our business. Chronic business, please don't forget we have hardly scratched the surface. US business, we are still in, not very large. We are still in small molecules, oral solids. There we can come into, little complex generics and biosimilars 4 or 5 years down the line. So that would help. 6 years doubling is not massive, so that's okay.
Sure, sir. And my second question is, so what is the durable competitive edge that which has led to consistent market share growth for Alkem, across all therapies over years? And are we taking any new initiatives now to maintain or enhance this competitive edge that we have over the years?
That's a comprehensive question. I think a competitive edge is luck, but I'm just joking, sorry. So I think we've got huge brands. We are a very entrepreneurial company where everyone is a quick decision maker. We have a culture. I think culture differentiates you. So that's a very kind of answer I'd like to give. But, the management is very focused. The promoters like to this. We are passionate entrepreneurs. We got good set of people. I think that's why I said it's a matter of luck. We got great people. And we don't hesitate to invest. There was a time, if you remember, EBITDA margins were close to 14% we did the IPO. That's because we were investing. So we take a long-term call on business and we invest and we wait and we do all the right things.
Sure, sir. Thank you.
Thank you. The next question is from the line of Bhaskar Bukrediwala from Arthia Investments. Please go ahead.
So thanks for taking the question. Couple of questions. One, the margin profile from a medium-term perspective. Now, as we can see that your chronic portfolio is shaping up quite well. So, would structurally your margins range, which has been, let's say, between 21% over the 3-year period, likely to inch up because of the scale built?
Yes, I think it will inch up, but don't ask me how much, but it will certainly inch up for sure.
Very broad directional guidance would you like to give without giving very specific numbers?
Direction guidance is always given 50 to 100 basis point every year. We'll try to inch up. Hopefully, we maintain that stance.
Okay. Sure. And would your gross margins in the chronic portfolio be higher than your acute portfolio?
Yes. Yes, for sure.
Okay. Yeah. Sure. That's the question from my side. That's all.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Just on the MR, so in the last 2-3 years, we had an addition of about 2,000 people. And so what is the current MR run rate and what is the current MR productivity? And tying up with the margins, so if you are largely done with MR additions with 10-12% growth, is there a possibility of, like what the earlier participant also asked, 50 to 100 basis points? So that is a culmination of that?
Yeah, that's also one of the culminating factors for sure, because the addition of MRs have more or less been done. But I think on specific numbers, Yogesh, you could answer them with them.
Yeah, sure. As a group, we should be around 10,000 plus, around 11,000 people, 11,000 MRs. And yes, we, other than the respiratory division which we have launched, we are almost done with our, addition of MRs. But nevertheless, we, as our MD also said, Sandeep, that we are not close to any future opportunities. So as of now, we are not, on a close run, we are not seeing any expansion, but we are open to opportunities.
Okay. And MR productivity, where we are in the...
Come again? Sorry, I didn't get you.
What is our run rate on MR productivity?
Yeah, I told you just some time back that our evolved business, we are in a range of around 8 to 10 lakhs. In the evolving, we are somewhere between 3.5 to 4. And just couple of years long business, we are in a range around 1.5 to 2 lakhs.
So ballpark will be around 5?
Around 5 to 5.5 overall as an organization.
Perfect. And secondly, on use of cash, now from an upcoming quarters and seen in the last few quarters also, there is a very strong free cash flow generation that is happening. And I think in the last call, there was a mention that we are evaluating M&A after a long time. We said that. So are we looking at aggressively anything on the table, and what is the current thought on this?
No, Prakash, so I think, yes, I think accumulation of cash will happen, and that's a good thing. I don't recollect whether we said we are open to M&A acquisitions, unless I have amnesia, I'm not sure. But I don't think so. So I think as we go forward, Prakash, I understand that cash accumulation will happen in the next few years. I think once we cross, let's say, some numbers and it becomes a problem, we could discuss that time. But so we are not changing anything right now, Prakash, in terms of our dividend policy or anything anything like that, Prakash.
Okay, so you're saying you're not too keen on M&A. Is that what
we're not too keen on M&A, Prakash.
Okay, so natural and organic build-out is what you prefer?
Yes.
Okay, great. And lastly, on tax rate, so we have seen one domestic company raising tax rate guidance. How do we feel given our plants which were, are still in Sikkim and all these, so how long we have these tax breaks and how long we could be under 14-15% kind of tax rates?
See, Prakash, for this year, our guidelines is 13 to 15% of tax rate. I think that is going to remain. For next year, definitely it is going to add up by another 100 basis point. So next year you can take 14 to 16% kind of. And if I understand your question correctly, you asked me how long we are going to have.
Yes, sir.
Sikkim benefit. So as you know, Sikkim benefit ends in 26-27. So
26-27. Oh.
26-27. But have in your mind, we have a facility in SEZ also. So that also is having tax advantage. And
they got MAT credit also. Huge MAT credit.
Yeah. So this SEZ, even though for 5 years it is 100%, but next 10 years 50% advantage is there also. But yes, as managing director he said, we have used MAT credit. Even though our tax rate it is going above MAT rate, but our cash flow on account of taxation it will be under control. So, but yes, definitely debit will start coming to P&L. Cash outflow it will not be there up beyond 21%.
Okay,
you want anything specific?
No, this is very elaborate. Thank you so much.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking the question. Sir, on the other expenses, this has been obviously one very volatile and unpredictable element for the last 4 or 5 quarters. I mean, in the past, it's been in early 20s, mid-20s as a percentage of sales for us. I think in the conversation that we've had over the quarters, if one understands right, we've been suggesting that there is not much structural change which has happened in this cost item. So is it fair to expect that at some point in time we start going back to early 20s percentage of sales for the other expenses, or there are some changes which have happened in the overall business, which sort of make us will be optimize significantly on that?
There are so many factors if you are referring other expenses. Other expenses is a combination of so many expenditure. It's marketing expense, it's manufacturing expense, and corporate overhead, and whatever is not covered under employee cost and COGS, mainly it is coming under other expenses. So it is very difficult to give exact prediction. But generally, our other expense is in the range of 20%, 18 to 20%. But definitely operating leverage is one important component in that. So as just now we discussed, for example, employee-related cost, when their productivity improves, definitely our revenue is going to go up, whereas cost is not going to go up that in that proportion. So that advantage is there. Same thing applies in other expenses also. If I have to take our manufacturing cost into consideration, marketing also similar thing applies. But I think our other expenses broadly it is in the range of 18 to 20% when it gets normalized.
Okay, sir. Okay. Thank you.
Between the quarters, we have some seasonality. So if you check across the quarters, there would be this variation of 18%, 22%, because there is a seasonality part also in our portfolio.
No, I got it. Thanks.
Thank you. The next question is from the line of Nitya Balasubramaniam from Bernstein. Please go ahead.
Hi, just one question on your chronic therapy strategy. So one read-through, if you look at commentary across companies, is everybody wants to grow in chronic therapy, and the market leaders in chronic therapy obviously will want to keep the market share and keep the leadership. So as the company which is now building presence, how is your strategy differentiated? Is it in terms of prescribers or geography focus or portfolio focus? What is it that Alkem brings to the table in such a highly competitive and a highly concentrated market?
In a generic branded business, very difficult to say that you can build a differentiation. But yes, our focus is very clear. We are known for building large brands. So, this legacy we carry, and that's how we are looking at our chronic portfolio also. We are looking at brand size of 100, 200 crore types in the coming time. And we have already chosen some of the key therapies like cardiology and diabetology, which constitute around 52% of chronic. So there will be investing heavy, and we'll look at building productivity and future expansions also. At the same time, we are reasonably good at CNS, so we will continue to consolidate. And some of the business like urology and all, we will have a reasonable expectation, not very high. So this is how we are working on our various portfolios and various therapies. In terms of customer, yes, this is where we will be working a little aggressive, because we don't have such a large prescriber base. So our endeavor would be to see that we expand our prescriber base across therapies.
Your strength obviously lies in primary care physicians because of your leadership in anti-infective categories. Wouldn't it be easier for you to bring the therapy down to the primary care level and leverage your leadership rather than trying to establish yourself as a specialist?
It will always remain. You have to make a choice between two, whether you want to go through a primary physician or you want to go through a specialist. I think we have chosen to go through a specialist route, and we will continue to sustain that.
Yeah, it's a tougher journey, but a more sustainable one once we arrive there.
Got it. Thank you so much.
Thank you. As there are no further questions in queue, I now hand the conference over to the management for their closing comments.
Thank you everyone for attending this call. If any of your queries have remained unanswered, please feel free to get in touch with me. Thank you.
Thank you. Ladies and gentlemen, on behalf of Motilal Oswal Financial Services Limited, that concludes this conference call for today. Thank you for joining us, and you may now disconnect your lines.